Happy Sunday, guys. It's your boy Stas here. Welcome back to yet again another video, and I sure hope you guys are ready because we have 10 stocks to cover today, all of which are reporting earnings this week. So we're going to break down everything that you need to know about these 10 stocks, earnings estimates, revenue, what I'm looking to do, the whole 9 yards, guys. But first, hit the like button. Do not forget to subscribe. Very important, guys. We're on the road to 100,000 subs here, and get your 30 stocks from Moomoo. Listen, once you open up your account using that link down below and you fund it with at least $100, you get 5 free stocks. Fund your account with at least $2,000, you get 25 more stocks, totaling 30 stocks, and your uninvested cash now will earn up to 8.1% APY. So guys, check out the link down below or go to stasurfast.com/Moomoo. And with that being said, cheers, take a sip of your coffee. You're going to need it for this video, and let's dive into it. So I don't want to waste too much time. Let's just get into it, man. We have 10 stocks, 10 companies to break down, which it's going to be a jam-packed video. And by the way, the market is closed tomorrow. It's President's Day, so keep that in mind. We do have a short week this week, and all of these earnings are going to be kind of jammed into 2-3 days here. A lot of these are on Tuesday, Wednesday, Thursday. So let's just dive into it. The first company I'm watching here for this week, they're reporting earnings on Thursday. It's Walmart, ticker symbol WMT, which you guys know, Walmart stock. Who doesn't know Walmart at this point, right? This company makes a lot of money, top line, bottom line, and their stock price has been going bananas. This thing just about 6 months ago was at 60, 70 bucks per share, and now we're well over, well, not well over 100, but we're over 100, guys, over 100 bucks per share, and we're at all-time highs right now. And you guys might be thinking, wait a second, why is Walmart 100 bucks per share? Well, they did a stock split. I'm not sure if you guys remember. They did a stock split. This must have been, I forget how long ago at this point. Yeah, it's been about a year. Holy smokes. So yeah, about a year ago, they did a stock split. Yeah, I mean, I don't really track Walmart, so I'm sure some of you guys don't either. I mean, so if you didn't know that, they did a stock split. I did know that, but I'm just reminding you guys here, if you're looking at the stock price and you're like, wait a second, wasn't Walmart like 300 bucks per share? Yeah, they did a stock split, or I think it was like 150 to 200 before the split. Either way, whatever. Now we're at 100 bucks again, right? That's how that works, right? Stocks do a stock split, so they look cheaper on paper, and now it's going to go back pretty much to where it was over time, probably. Not guaranteed, but they're on Thursday, the 20th. Walmart is set to report EPS. The estimate is 65 cents on average versus 60 cents from last year on revenue. Get this here, guys, of $178.83 billion. I mean, that's insane how much they're bringing in on the top line versus $171.91 billion from last year. That's up 4% year over year. And don't expect crazy growth out of Walmart, guys. This is not a tech stock. This is not a high-flying growth stock. It's Walmart. It's stable. It's slow. The growth is there, but it's not going to be crazy. It's going to be single digits, and that's what we're looking for, right? 4% revenue growth year over year, a slight increase in EPS year over year. That's pretty good. But the thing is here on the charts, guys, we are a little overbought. Let's be honest. Let's keep it real with ourselves. I'm not liking that we're this overbought heading into earnings. I think we might be due for a pullback, but who knows? With earnings, anything is possible. So number one, Walmart, WMT. Number two, we have Square. You guys remember Square, Block, whatever they're called nowadays. XYZ is the ticker. I just put in SQ like an idiot. They just changed the ticker to XYZ. And as I was looking up the stocks for this week, for this video, guys, this stock, XYZ, Square, Block, whatever you want to call it, this stock is up like 2% in the past 5 years. You heard that right. It has not done anything in 5 years. And this one was one of the darling stocks of the pandemic. Do you guys remember that? This stock, I remember like yesterday, during the pandemic. I was like, I should have bought Square, but, I didn't. It is what it is. And now the stock's at the same price it pretty much was before the run-up. Isn't that crazy? We're at the same level now we were at pretty much 5 years ago, which is unreal. So, yeah, at this point, guys, XYZ, I don't know why they picked that ticker. I mean, that's so stupid. Anyway, whatever. At this point, man, XYZ, I keep laughing when I say that. Square, we'll just call it Square. They're reporting earnings, I think, on the same day as Walmart. Let me double check that. Yeah, same day as Walmart on Thursday after the bell. And this stock, I mean, the company, let's just be honest, man, it was in a bubble. It was in a clear bubble. It should have never been a $300 stock. We're nowhere near that for a reason. Growth has slowed down. A bunch is not going the best here for Block Square. EPS is projected at 87 cents versus 45 cents from last year on revenue of $6.26 billion. Not bad, but that's versus 5.77 from last year, up a whopping 8% year over year, which is not the best for a growth company like Square, Block, XYZ. But yeah, we'll see. We'll see how the numbers come out here, guys. And the chart, it's pretty, it looks pretty decent on the 4-hour time frame. But we are downtrending a bit over the last 3 months. So if we get some sort of breakout above this channel, that'd be ideal for the bulls, but we're just not there yet. We're not getting it yet. So Rivian, RIVN, another one that I'm watching for this upcoming week. It looks like it's starting to break out. Rivian starting to break out of the moving averages, heading into earnings on the 20th. On Thursday, same day as Walmart and XYZ. So Rivian, guys, is really starting to make a move here. Maybe some hype's building up into earnings. You guys see the pop here break above the moving averages for the first time in about a month. So you guys see that big move here. And Rivian, their projected earnings per share of negative 77 cents. So obviously they're losing money, right? But not nearly as much as last year, which is good. And I'm looking outside. It's like a hurricane outside right now. There was a big, loud, it's raining like crazy, man. Holy smokes. I'm distracted right now. Where was I? Of course they're losing money. They're losing money, but not nearly as much as last year, which is good. I mean, this company, man, stocks or companies in general, they can't survive forever when they're losing money, unless they keep getting investments, cash infusions from places. But if that stops, Rivian's screwed. But if they're able to turn a profit, eventually they'll be able to survive on their own. But who knows when that's going to be, man. I remember I read a stat a year or two ago. They lose like $50K, $60K for every vehicle they sell, which is unbelievable. Hopefully it's gotten better. But yeah, negative 77 cents EPS versus negative $1.58 from last year. Losses are narrowing. That's good. But revenue's not really growing much, honestly, as much as I'd like to see it. $1.43 billion is the estimate versus $1.31 billion from last year. That's up a whopping 8.4% year over year. So what do you guys think? I'd like to see that growth a lot higher, but either way, the stock is starting to make a move here. We're above the moving averages. And what do we have here? Do you guys see this? This is a pretty obvious inverse head and shoulders. Do you guys see this, right? We have the left shoulder, the head, the right shoulder. It kind of looks like, I don't know, call me nuts, but it kind of looks like it's starting to play out here, right? If this company crushes earnings, guidance, who knows? We could be going a lot higher. This could really fully play out. It's in the cards. And on top of that, we kind of have a mini inverse head and shoulders in the short term as well. Do you guys see the 20-day chart right here on Rivian? Kind of an inverse head and shoulders as well. So not too bad of a setup here for Rivian. I feel like if they surprise, momentum could continue. Now, number 4, and these next couple of stocks here, guys, are going to make me hungry. Yeah, there's a lot of restaurant stocks reporting earnings this week, man, with number 1 being one of my favorite, if not my favorite burger spots all time, honestly, all time. You know, I ate a bunch of this in college. I'm sure you guys could relate. Shake Shack. And honestly, I haven't had it in quite some time. Might have to make a trip back to Shake Shack, but I would always get, I forget the exact burger, but there was like cherry peppers on there, some really good cheese, a double-decker burger. I mean, Shake Shack does it right, man. They do it right. I love Shake Shack and Five Guys. Those are my top two for sure. But yeah, Shake Shack's reporting earnings this week here, guys, on the 20th. Yeah, all these are pretty much on the 20th so far, Thursday. Shake Shack is in the morning, and this stock is reporting earnings. They're not reporting earnings, but it's pretty, well, they are reporting earnings, but they're pretty beaten up into the earnings report, right? And they're projecting EPS of 24 cents versus 2 cents from last year. That's pretty good, guys. Very good increase for Shake Shack EPS-wise year over year, and revenue. $329 million is the estimate on the quarter versus $286 million last year, up 15% year over year. And guys, the stock is down $30, 22%. Heading into earnings, we have a death cross here under both moving averages, which honestly, man, this setup here could be setting us up for a nice rebound if the company crushes earnings, beats on guidance, whatever it may be. It's pretty beaten up. It's the opposite of being priced to perfection heading into earnings. So I'm watching this for a potential rebound. Shake Shack, ticker symbol SHAK. I'll set my alert at, let's put it at 100. We'll put it at $110 for now. Maybe I'll do another one at $112. Let me set that right now, guys. And by the way, run the likes up on this video. Make sure to subscribe here on YouTube if you haven't done so already, guys. I think 70% of you watch the content, but you're not subscribed. And how am I going to get to 100,000 subs? How are we going to get there, guys, if 70% of you watch the content and you're not subscribed? So if you want to subscribe, make sure to do it, guys. I appreciate you all as always. So number 5, I said these stocks are going to make me hungry. My stomach's already going, guys. Number 5, we have Cheesecake Factory, which is unreal. I haven't had Cheesecake Factory either in a while, but they're great. The food's great. I mean, geez, give me a cheesecake now. I would go crazy. A lemon cheesecake. Oh, man. This is bad, guys. This is really bad. I probably shouldn't be talking about these restaurant stocks now, but hey, Cheesecake Factory, they're reporting earnings on, let's see here, what day? The 19th. Okay, first one on Wednesday that we've talked about so far in this video. So the 19th is Wednesday. Cheesecake Factory's reporting, ticker symbol CAKE, C-A-K-E is the ticker, right? And this chart looks great. I mean, doesn't it? This thing just hit a high of $58 literally about 2 weeks ago. And now we've pulled back, a healthy pullback at that, to about $51, $52, down about 9-10%, all while maintaining an uptrend on the 4-hour chart. So Cheesecake Factory's reporting, expected to report on average, EPS of 92 cents versus 80 cents from last year on revenue of $912 to $913 million versus $877 million from last year, up 4% year over year. And Cheesecake Factory, I mean, from what I've seen, they're not growing. I mean, obviously, they're not growing as much as they did years ago, but they're in that single-digit growth range typically, on any given quarter for the most part, which is not bad. That's not bad, honestly, man. For a restaurant stock, it's kind of a slow and steady, stable growth for the company, and they've bounced back. I mean, a couple of years ago, the stock was in the 20s. I'm pretty sure I did. I owned it at one point. I'm pretty sure I bought it in the high 20s, low 30s, sold out in the 40s for a profit. And, it's getting kind of close to where the stock was pre-COVID. Pre-COVID, the all-time high was $67. We're getting close, guys, and probably, in my opinion, this will take that all-time high out. I'm not saying after earnings or this year, but at some point, Cheesecake Factory will get there. It's not one of those failing companies, failing stocks that won't get back to highs? I think it will. It's only a matter of time. But keep your eyes on Cheesecake on Wednesday in the morning, Wednesday the 19th after the bell. We're getting Cheesecake Factory, and Wingstop is another one, which I actually have never tried Wingstop. You guys might flame me in the comments for that, but I got to try it, and it looks great. I see all the commercials. I'm pretty sure they sponsor the NFL, or is it the NBA? Either way, whatever. I gotta try Wingstop, but this one is very beaten up, right? The stock was at 430 back in September. Now we're at 300 flat, pretty much down 30% on or throughout that time period, and we can see we have a clear inverse head and shoulders on Wingstop. You guys see right here the left shoulder. You got the head right here, boom, and the right shoulder. Although we're not fully breaking out yet. It could happen potentially here with earnings. I'm pretty sure earnings are also on Wednesday. Yeah, Wednesday the 19th in the morning, though. We're getting Wingstop's earnings, and their ticker is WING. Pretty easy. Wing, right? Wing is their ticker symbol. How much better could it get for Wingstop? So I'm going to set my alert at 3:15 for this thing. We'll see if it's able to get out of there, maybe get some momentum. Wingstop's earnings per share estimate is 87 cents versus 64 cents from last year on revenue of $164 million versus $127 million last year. That's up 30% year over year. So out of all the companies we've talked about so far, Wingstop is projected to grow the most by far. 30% is really good, guys. And the stock's beaten up about 30% from recent highs. So if they crush earnings, revenue, guidance, this could see a huge rebound because it's so beaten up, right? If we get some more certainty, good guidance out of management, right, from Wingstop, expect a sharp rebound. At least that's what I'm expecting here. So another one I haven't tried, but I've wanted to try here for the longest is Texas Roadhouse. And quite frankly, there's not many by where I live. So that's probably why I've never tried it. But I think there might be one within an hour from where I'm at. But yeah, I'm not driving that far for Texas Roadhouse, to be quite frank with you guys. But if it's in the area, if I'm in the area and it's there, hey, I might try it out one day. But one day I will try it out. Texas Roadhouse is reporting earnings this week on the 20th after the bell. So Thursday after the bell. TXRH is the ticker. Pretty easy to remember. Texas, TX, Roadhouse, RH. Not bad. And they're projecting earnings per share. Earnings per share. Holy smokes, guys. Might need some coffee. Cheers, by the way. Oh, man. Yeah, we don't edit here on the channel, guys. We don't edit. We do one takes. Editing, yeah, we'll leave that for the other YouTubers. But Texas Roadhouse, they're projecting earnings per share of $1.64 versus $1.08 from last year on revenue of $1.41 billion versus $1.16 billion from last year, up 21% year over year. So Texas Roadhouse, guys, pretty good revenue growth, 21%, and the stock's down probably around 20%. Yeah, about 17, 18, 19% from the recent high. So kind of a similar scenario with Wingstop, right? Similar setup. If Texas Roadhouse gives us good guidance, they beat, they surprise, we could get a rebound considering how beaten up the stock is. And on the one-year chart, man, we're still looking pretty good. Overall, the uptrend is maintaining. You guys see it here on the 3-year chart as well. So this dip could get bought up very quickly if the company reports good numbers. So I'm going to set my alert. I'll put it at $180 for now. Mark is at or above $180 per share. And now we have 3 stocks left, guys. Let's get into it. But actually first, make sure to join my email list. I'm not sure if you guys have done that yet, but it's free, and I send out my top stocks weekly right to your email, right to your inbox. All you guys have to do is put your first name and your email address using that link right down below. Again, it's free. No credit card, no spam, no BS, none of that. Just straight up value. So get in there, linked down below. Now, Mercado Libre is the 8th stock here on the list, guys, which this one has been crushing it. Talk about performance in the last couple of weeks, especially, and I guess technically it's still flat from where it was back in September, October, November, but it sure as heck looks like it wants to break out of that level. Now, does it? I mean, this looks pretty good to me, guys. We're seeing a golden cross. We're above both moving averages. Now we're testing 2100, 2150, which was resistance in September, October, November. Yeah, I was going to say a little bit of December, but it was mostly September, October, November. And now with earnings coming up for Mercado Libre, MELI is the ticker. Will this be enough for it to get it out of this hump, out of this resistance? It very well might be. Earnings are on Thursday after the bell, the 20th, and they're projecting earnings per share, analysts are, of $7.56 versus $3.25 from last year on revenue of $5.94 billion versus $4.26 billion from last year. That would be up almost 40% year over year. So, guys, set your alerts, 2150. If this company beats guidance, really, if they surprise at all, this could really start ripping out of here and breaking out maybe to all-time highs. I'm pretty sure the all-time high is 2160. Yeah, it is. So now we're about $60 away from that level. Let's see if momentum can carry us to that point. So Occidental Petroleum, one of Warren Buffett's favorite stocks that hasn't been doing well, let's be honest here. They're also reporting earnings this week. They're on Tuesday after the bell, the 18th. So the first company that we're talking about in this video that's reporting earnings on Tuesday, it's Oxy. OXY is the ticker, and they're not looking pretty, guys. Their numbers, that is. Well, their stock, for that matter, as well. But their numbers year over year, they're not looking good. EPS estimate is 67 cents versus 74 cents from last year on revenue of $7.14 billion versus $7.53 billion from last year. That would be down 5% year over year. Yeah, not ideal there for Occidental Petroleum, guys. But if Buffett's buying it, that doesn't mean we go and blindly buy it. But there's definitely something there, right? There's got to be something there if Buffett continues to buy the stock on the dip. So, yeah, I'm eyeing up earnings, guys. We do have a bit of, a potential bottom here in the mid-40s. We hit 45 back in mid-December. We hit it literally just about 2 weeks ago. So we bottomed out here in the short term. We also arguably have a bullish divergence. We're starting to move up a bit into earnings. Let's see if we get a big breakout on Occidental Petroleum over the coming weeks. That would be ideal. And last but not least here, guys, we have Etsy, ticker symbol ETSY. They're let's see what they're reporting earnings. They're reporting earnings on the 19th, which is on Wednesday. It looks like here in the morning, right? Let's see. Wednesday in the morning, and Etsy's looking to do EPS of 94 cents versus 62 cents from last year on revenue of $861 million versus $842 million from last year, up a whopping 2%. I mean, guys, where the heck has the growth gone for Etsy? It's pretty much gone, at least as of now, right? And their stock price, I'm pretty sure, has not done anything. It's actually not looking the best at all. I mean, this one, oh my God, just like Square, realistically, guys, Etsy was in a bubble during the pandemic, no doubt. I mean, people during the pandemic, they were at home, locked in their houses. What were they doing? They were selling a lot more things on Etsy. They had a lot more time on their hands. And that's not the only reason why Etsy stock went up, but it's definitely one of them. And it hit $307 at the end of 2021. So this thing was running up for a good year and a half. It went ballistic from $50 to $300, and now we're right back to $50. We're right back to where we were pre-pandemic. Isn't that crazy? A lot of these stocks have just erased their gains from the last 5-6 years, and that's pretty telling. That goes to show that they were never worth that anyway. Clear bubbles, right? In hindsight, even during that time, we were calling out bubbles left and right. We were calling them out. Roku, Peloton. We were nailing these bubbles. I'm pretty sure Roku is very similar on the chart. Yeah, I mean, Jesus, guys, holy smokes. It hit $500. Now it's at $100, under where it was pre-COVID. So, yeah, we nailed these bubble calls, right? And I don't think Etsy's coming back, quite frankly, guys. Growth is dying down. It's a great company, great service. Not a great investment, in my opinion. Although we did have a 3% green day on Friday. That's nice. But, yeah, I mean, it's still looking rough here on the charts. So that's it. Those are 10 stocks, guys. We made it to the end, or at least I did. I'm sure some of you guys did as well. 25 minutes in, 26 minutes in. Unbelievable. So what do you guys think? Let me know your thoughts in the comments. Hit the like button. Do not forget to subscribe. We're not almost, but I'm going to keep saying almost at 100,000 subs. Make sure to subscribe and get your 30 stocks from Moomoo. Open up your account using that link down below. Fund it with at least $100. You get 5 free stocks. Fund it with at least $2,000. You get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. So guys, what the heck are you waiting for? Use that link down below, get your 30 stocks, or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you in the next video.